What's good, everyone? It's Nick D. Thank you for clicking on that video and obviously coming to check out the channel. On this video right here, it's going to be purely unscripted. I'm just going to go with the flow and pretty much take you guys through exactly how I made over $35,000 in profit in just 30 days. This is not to flex. This is just to show you guys three simple things that I feel added massive benefit to my trading over the past 30 days. And hopefully you guys can take some free value. There's nothing to sell on this video. This is purely just going to be some free value. I'm going to show you guys exactly how I did it. So let's jump in. First of all, I'm going to show you guys the proof of what I did. And then I'm going to talk through the charts and really just talk through the three things that really helped me. So let's jump straight into it. All right, guys. So I'm going to, first of all, before I jump into the three things and just, break down how I did it, give you guys as much value as possible. I wanted to show you the proof, right? Like there's a lot of people out there, there's a lot of traders out there who sell this crazy lavish lifestyle. I don't really know how they have all this time to do all these YouTube videos. I'm just starting to try to do them now. But, when you're actually trading in the trenches and actually, mentoring people and doing that sort of stuff, I don't know how they do it. But anyway, I wanted to take you guys through basically the proof of the $36,000 profit. Show you guys, first of all, that it's a real account. So I trade live accounts. We've got a user ID. You got Nick at onyxcryptoeducation.com. If I take you guys to the messages, you can see I'm ranking on the futures leaderboard, rank 68 today. So you don't get those rankings on demo accounts. All right. I can also show you inside the P&L. So if we go to the futures account, if we just click the overall stats, so this is the futures P&L analysis. The total equity in the futures account is 31K USD. Today's P&L 2,700. I took one trade this morning. Recent 7 days 16,881. And the 30-day is 36,597, okay? And we go recent 30-day. This all lines up with that. There's no screenshot or bullshit. So the reason I want to show you guys that is because, there are really three things that I've been focusing on to get crazy results like this. And I feel like it can transfer to anyone with any strategy, right? Like today's not going to be about strategy. Today's not going to be about what's the best way to trade. I've been in the industry long enough to know that there isn't a one-trick pony. There isn't one way to get profitable. Basically, you can get profitable on a load of different strategies. What's really going to help you guys is following these three things that I'm about to give you, okay? The first one, just off the top of my head, is going to be follow one strategy with one set of rules, literally. So, I speak to a lot of traders. I know a lot of unprofitable traders, profitable traders, some people who are at break even, inconsistent. And I feel like the biggest thing that people struggle with is remaining consistently engaged in one strategy, right? I feel like people just want to try all different sorts of things on different time frames with different executional styles. So one trade, they might do a risk entry, which means let's just say they find an area of interest, right? For example, let's say they find an area of interest, just pulled a random one. They literally just put their short position here, their stop loss above, and then they target a low, right? And the other time, what they'll do is they'll do a confirmation style entry where they actually wait for price to come in, shift structure, and then they get involved on the smaller time frame and then take price lower. So, with what I've been doing over the past 30 days to get those results, I've really focused on one entry model. Okay, so what am I actually looking at to get involved into the trade? And one executional style. So am I using risk entries, which is just leaving your limit orders on the order book, or is it actually confirmation style entries and getting a lot more confirmation, right? So you got to really dial down what's been working for you. Because if you're a trader or someone who's been in the market a while, you should have some sort of data. Okay, like if you don't have data, then you're obviously not tracking your trades, you're not journaling, or you're not doing anything correctly. So you're probably not going to know where to start. But if you have a little bit of data, you should be able to have some sort of data pointing you towards what has worked best in the past. If you find that data, literally just double down on it. Okay, focus on exactly that entry model, that strategy. How did you come to the conclusion to get involved in that trade? How did you enter that trade? Where was your stop loss placement on that trade? Double down on what's working. And then what you can start doing is actually, understanding, okay, I took 10 trades last week, all with that exact same entry criteria and strategy. What was my win rate? Okay, so what was my win rate? what was my average risk to reward expectancy, okay? You can also look at things like max drawdown, okay? How close did I get to the stop losses? Things like that. And then what you can start doing is optimizing. So let's just say you've got an entry model and the actual strategy here. You can start looking at your data that you're getting from these data points, and you can go back and you can actually start optimizing what you're doing. And then essentially you just continue to get better and better. The problem is what people do is they have like 5 different entry models, okay? So one will be market execution, one will be confirmation, one will be limit orders. Sometimes they might not even know why they're entering the market. And they'll have 3 or 4 different strategies or entry triggers, right? And they get all this data at the end of the month and they don't really know where the fuck they're going wrong, right? So that's why I say it's real important, and something that helped me a lot was just sticking with one strategy. Literally just one strategy with one trade setup, okay? And one set of rules. Now, the second thing that is really, really important, and I try to teach my students this a lot. By the way, there's nothing to sell in this fucking video. I don't want anything. I'm just trying to give free value back, right? Is that time horizon of trades, okay? So what we're trying to do with trading is, of course, we're trying to be involved pro-trend. So we want to be trading with the trend. But something that people don't talk about a lot is the time horizon of that trend, right? So for example, what you want to be able to do is maximize the time horizon that you're involved in a trend, okay? Because you're going to get more opportunities to continue in that direction, and there's going to be less opportunity of a reversal straight into your stop loss. Now, I'm going to show you what I mean by that. Let's just identify on this 4-hour time frame, right? Let's just say we've got, like, let's just do a vertical line here. We'll do it right here, okay? This is essentially where the market structure started turning bearish, okay? As soon as we got a break of this low, and then we had this lower high, okay? So we had the high that was lower than this high here, and then we had the break. That's essentially what caused that bearish movement, okay? And then we had a huge trend here. So the maximum time horizon to get involved in this trade and this trend early is here. Okay, so the maximum time horizon is here, and then the worst time horizon is obviously down here, okay, because you're coming into levels of demand, levels of support, however you want to talk about the market. This isn't about technical analysis, as this is just trend analysis, okay? So with a trend, you're going to have what I like to call time horizon. Now, the best trading opportunities with the least amount of risk is always going to be the trades that you get involved earliest in the trend, okay? So for example, you know, this area of interest here, when price comes in, there's a breaker structure here. You've got this area of interest here, okay? This area of interest here, this area of interest here, okay, where price comes in to the left and then goes lower, okay? So there's all these areas to get involved, but as prices continue to come lower and lower, if you believe in supply and demand principles of price, then you know that the lower that price gets, the higher the chance that price is going to reverse and break one of these highs, okay? And what we're essentially trying to do as traders is find an area to get involved, okay, in line with the trend and have a safe level to put your stop loss. That gets worse and worse the lower down the trend you go. Okay, so one thing that I always try to identify is how early or late am I involved in this trend? Because it's going to help me a lot to understand, you know, what sort of risks I should be taking. Like, you know, dynamic. If you're using dynamic risk, you know, how much risk should I be taking on this trade? You know, what's the time horizon of the trend been like? Am I just entering at the start of the shift, or am I entering at, you know, close to an area where there could be some level of demand or support that can reverse price into a stop loss of mine, right? So this is something that's really, really important. So that's the second one there, is the time horizon of your trades. And then thirdly is going to have to be something that's really not a popular opinion, but it's worked for me. It's dynamic risk, right? And I always try to do this with my own trading. It's when you know your edges there. Let's just say you've got 5 rules, okay? So you've got 5 trading rules, okay? Sorry for my drawing. As I said, this is unscripted. And you've ticked off every single one, and this is an A+ trade setup of yours. Like, this is exactly what you know works. It's worked in the past. You've got the data on it. You know exactly that you're confident on this trade setup, and it's exactly at the time you want to see it if you're a time-based trader as well. you can take more risk. Okay, now the most important thing is that you have a safe invalidation price. I see a lot of traders, they try to fit their risk management by they try to fit their stop loss to their risk, right? We need to be managing our position sizes correctly so we can have a looser stop loss and a more effective stop loss. Stop trying to, have a 3 or 4 pip stop loss. That's probably why you guys get stopped out a lot if you are facing that. You know what I mean? So I always try to give my stop losses a lot of room, because what that's going to allow me to do is still get a good risk to reward ratio. Don't get me wrong. I'm always looking for minimums of 3 to 1. But at least I know I'm in an area of invalidation. So for example, let's just do an example here. We'll go replay mode and let's just choose here. Okay. So we'll go to a 2-hour time frame. Okay. So let's just say we get so we know that market structure is bearish. Okay. So we've got the low here that gets ran through, new lower low, new lower high. Okay. This gets ran through with price here. So we've got a trading range here. Okay. So let's just say this is the lower high and this is the new lower low. Okay. Where am I looking to get involved? Okay. For me, I'm looking to get involved, if we go back to a 4-hour time frame, at a premium level inside of this previous trading range. Okay. So if we have a look, I can pull this swing high here. Okay, before that structure broke. Now, I am looking to get involved here, right? But what I always think of first is, where is a safe place that I can put my stop loss? Where am I invalidated on this trade? And this is what a lot of people don't think. They're always thinking of, okay, where am I taking profit? But you got to remember, guys, you're supposed to manage risk first, I believe, right? So if you've got your stop loss tucked above this high here, then if price does come up and we don't get a rejection back in line with the trend, and we do come up and break structure to the upside, you're wrong on the direction of the trade anyway. The big problem that I see, guys, is I see a lot of people, they'll go short at an area, they'll put their stop loss inside or really close to the demand level, the supply level, sorry, and they'll get stopped out of the trade by a little bit, and then it will go back into the direction that they planned. And what this actually is happening here is that you weren't wrong on the fucking trade. You just entered in the wrong area of price and you had your stop loss way too tight. Okay. So, and this can really do a lot of bad things to your psychology as a trader, I believe. So give your stop loss the adequate room it needs, because ultimately, guys, this breathing room here is just your invalidation. You can literally be happy that if price comes up and hits that stop here, you were wrong on the trade, because it didn't only go above the supply level, it actually broke structure to the upside as well. Okay, so you pretty much don't want to be involved in that trade anymore anyway. You know what I mean? So in this scenario here, let's just say I was taking this trade, my stop would be above the high. Okay, so you're still getting, if we do target the low here, so we're always going to target a run for the external low. Let's go to the hourly. This is what our trade looks like, right? Now you can get a bit tighter on the stop, but let's just say for this scenario here, let's just use a bit of a looser stop loss. I know for sure now, I'm happy with a 3 to 1. My stop is safe. My entry is good. Okay. Let's just play price. So we get tapped into the trade right there. Okay. And we should get a move to the lows. Speed this up a bit. So there's your move to your take profit. Okay. Now, what I see a lot of the time is people will find that, so they'll understand that, okay, like, people aren't bad at identifying supply and demand levels. It's not what they struggle with, right? They struggle with, okay, so I've identified the supply level, for example, right? Now, I've gotten the break of structure to the downside, so I know I'm looking up here to go short. What they will sometimes do, though, is they'll enter at the start of the supply level and they'll put their stop loss like inside the level. So you got to remember what's actually occurring here. If you actually think that this whole area here is a level of supply, why would you have your freaking stop loss inside of it? You know what I mean? You want to have your stop above areas of invalidation. Where am I actually wrong on the trade? Okay, so for me, I would rather take a higher entry in hopes that even if I do miss out on the trade, at least I was entering in an area where I can put a safe stop loss and still get a good risk to reward ratio. You know what I mean? So let's just say I targeted this low. Okay, it's a 3.5 to 1. I am happy with that trade setup. Price comes in, I get a lot of breathing room at this point. My stop is above the high. So then I can play price and I can be like, okay, I just took 3R out of the market. Okay, and you repeat the same process again. So for example, if price comes down, breaks this low, where is my previous high? Here. Okay, that is the high before we made the low. Okay, the highest point in that trend here before we made the low. So now I'm looking and I'm like, okay, this is an area where I'm looking to get short again if price gives me the opportunity to do that. Okay, so let's say we go short here. I'm not going to put my stop loss here. I'm going to have my stop above not only this high on this scenario here, I want to actually have it above this high as well, okay, in case we get a sweep. All right, and then I'm going to be targeting this low. I'm still getting a 5-1 nearly. So if we play that, if we get a move into price, nah, it doesn't look like we get a move into price, but you guys understand what I'm talking about there. That would have been a great trade if we did though. So that's pretty much it, guys. So the first one I spoke about was your one trade setup. So literally one specific trade setup. What do you want to see? When do you want to see it? How do you want to see it look? You know, what is the character of price that you want to see? One entry criteria or one rule set. Okay, so what are the rules that you want to see before you actually get involved? And how are you executing that trade? Time horizon. Okay, so how early are you getting involved in these trends? So when you're going short, how late or early are you into the trend? It's going to make a big difference, guys. If you have a look at trades where you got involved and instantly got stopped out, have a look how deep into the trend you were already, okay? And then let me know in the comments. And then lastly, guys, what we spoke about was stop loss placement, okay? And giving your trades room to breathe, okay? It is so fucking crucial, guys. I see a lot of people, they have good trades, but they don't let their trades breathe enough, okay? So, guys, I hope that video helped a lot. I just wanted to show you guys 3 tips that I feel helped me a lot in the last 30 days. As you guys know, I haven't been really active on YouTube. I've been busy with my own trading, you know, helping my students, guys. But this year, I'm really going to be ramping YouTube up. I'm really wanting to give back a lot of free value. I don't want anything in return, guys. So, yeah, just if you are watching this and you do like what I'm talking about and teaching, please just give a like, a subscribe, and a comment. Just support the channel, guys. That's all I ask. Thank you so much. I'll see you guys soon.